Mortgage apps dropped to the lowest level that we've seen in 22 years. That's no surprise. All right, people are spooked about the market. Some of the reports that came out this week on housing and builder confidence, they're kind of ugly. And we're going to get into that. But first, let's start off with one, like, comment, subscribe to my YouTube channel. Love having people come on board, comment. I love a good conversation when we can speak about the issues intelligently and professionally. Let's get into some of the reports. Today, we just came out with the existing home sales report. This is for the month of June. We had a decrease in home sales of the month of June, previous month, of 5.4%. It was expected that we would have a 3.4% decrease. So this was a lot worse than what was expected. This is the 5th month in a row where existing home sales have decreased. And that brings us down like 14% year over year. The total number of existing home sales are 5.21 million. That's going down, but you know what? That is right in line with where we were at pre-pandemic. One might think we're kind of coming back to normal, right? Before the pandemic with regards to the number of existing home sales. Back to reality, the crazy days of the 2% interest rates are gone. All right, so let's look at who is buying homes. First-time home buyers, they increased from 27% up to 30%. All right, so that's good. First-time home buyers can still buy homes, and they are still buying homes. All right, cash buyers, still out there. They're still buying homes, 25%. Investors, all right, 16%. This number is kind of interesting because you know what we really haven't accounted for yet, and we'll probably see over the next several months, foreign investors, especially from, as they open up travel, they're going to come back, and guess what? They love Hawaii. And you know what? They don't care about interest rates if they're paying all cash. Inventory is actually up 18%, all right, which is pretty solid. 3 month supply, we have a 3 month supply that's up from 2.6%. Now, a 6 month supply of homes is what is normal and considered a balanced market. So we're still tilting towards a seller's market, but the fact that we have a lot more inventory, and that inventory should expect to stay, continue to increase. That's going to bode well for buyers. All right, the average days on market is still 14 days. I hear this all the time. After I talked to some realtors today, they're expecting, I'm just waiting. We're doing some short sale training, some foreclosure training. Yeah, but you know what? Foreclosures right now account for less than 1% of all purchases. All right, we're not there yet. Why? Because people have a ton of equity in their home. They'll sell and they won't lose their home. Over the course of the next year, couple of years, you are going to start seeing some, especially if the economy continues to veer in the direction that it's going. But right now, not a lot of foreclosures. Today, actually, this was a kind of a note going back to the pre-pandemic levels with the existing home sales. The inventory that we have right now is in line with the inventory we had mid-2019. So before the pandemic, pre-pandemic, we were at that level inventory-wise. So, we're kind of going the cycle. Real estate operates in a cycle, and the cycle is coming back. It's coming around. All right, we have a lot more inventory now. We're going back to what it was like mid-2019, and we may be looking at kind of what it was like in 2018, because the rates are where they're at. The median sales price across the nation has been, between 19 and 24%, or 19 and 21% for much of the last, couple, years. All right. Right now we're at 13%, which is still super high. All right. Did I say stupid high? It's not stupid high, but super high. At 13%, we should be in the mid to low single digits. That is healthy. That is an acceptable rate of return of median sales price. So, but the key here is we dropped from 19 to 20% down to 13% median sales price. That is, again, coming back to that return to normalcy. What's happening in the market? Well, last week, guess what? Mortgage apps dropped to the lowest level that we've seen in 22 years. All right, they dropped 6% last week. And that's no surprise. All right, people are spooked about the market. Here's another big report that leads me to believe we are not in a housing bubble. This is the National Association of Home Builders Market Index report. This is an index of 0 to 100. Anything above 50 is expanding. It dropped 12 points down to 55. That's a huge drop in the happiness of the builders across the country. And the biggest reason why is because buyers are not showing interest right now. This is on new homes, all right? These are the builders. Builders, what they're concerned with are production bottlenecks, rising home building costs, inflation. Those three things, all right, basically they're causing builders to halt production. They're saying, you know what, we're not going to build a new home. We're not even going to start. Matter of fact, starts were down 2% last month. We're not going to start because you know what, it costs more to build this home than we can sell it for. That's not how home builders stay in business. They're slowing their roll. Home builders are slowing their roll. They're halting production. That goes to wage inflation. They got to pay people a lot more to go out, especially right now. It's freaking hot on the mainland. All right. So what does that mean for the inventory? That means we are not going to get to a point like we were when there was a housing bubble, when the builders were just, man, everywhere you look, they're putting up new homes. It's not going to be that way this time, all right? We are not going to build enough homes to meet the demand. All right, here's another report. CoreLogic home rental price report came out. Rental prices are up 14% year over year. That ain't going to change. Up 14%. Expect that number to continue to go higher. What do you do? I just gave you a crap ton of not the best news if you're looking to buy a home. Well, I think you gotta do three things. One, you gotta adjust your budget. Two, you gotta adjust your strategy. And three, you gotta adjust your attitude. People got liquored up about buying homes because they were gonna turn a $100,000 profit in a year, gonna roll out with some cash. Hey, why do you buy a home? You buy for stability. You buy for having a roof over your head and a place to raise your children that you own. All right, where you dictate what you're going to do under your own roof. All right, you can have pets and you don't have to put a deposit down. All right, you can have pets. Adjust your attitude. Why do you buy a home? If you buy a home and you know you're going to live in the home for more than 2 years, it's still a really good investment. But you got to do those other things too. Adjust your budget, adjust your strategy. So that's what I got for you today. Don't take anything I'm saying negatively. I'm just reporting the facts. And don't make a decision not to buy without talking to your lender to see what they can do to help you out. Your lender realtor team, if they're working together, then they should be able to help you out to at least get you into a payment that's comfortable, that's not going to break you until you can actually refinance. And like I said, you know, within a year and a half, we should be able to refinance some lower rates because I think rates will ultimately come down once we get a handle on inflation. All right, y'all have a great weekend. Thank you for listening. All right, peace.